At several points throughout the time leading up to a specific lockup, the shares of Lucid Group traded considerably downward. The expiry of a lockup term for select early investors has had a detrimental impact on LCID in the past, and the lockup period for the large investor PIF is about to expire. The fear of losing money is back, and this time, investors are afraid that the consequences will be considerably more serious than they were last time. If you're looking for an answer too, there's no need to search any longer. We're here to inform you. What is a lockup period, and how does it work? When does the PIF lockout period end? Moreover, what impact may it have on LCID stock? These are the kinds of questions that we will be answering in today's video, so make sure you stick around until the end. Welcome back to New Vehicle Media, your go-to channel for EV stock. Quick reminder that subscribing's free and liking the video helps YouTube suggest similar content. Comments are loved and featured in our upcoming videos. Following an initial public offering, major shareholders are restricted from trading their shares during the first few months after the company's stock is traded on the open market. When Lucid went public, the primary stakeholders were restricted from selling shares until a mutually agreed upon time. This seems to be straightforward, but there has been some misunderstanding over when the PIF lockup truly ends. So let's settle this issue once and for all. When the IPO lockup is in place, Lucid insiders, such as the CEO, CTO, and CFO, and a select group of early investors, are unable to sell their shares. This helps to maintain discipline during the IPO and prevents the market from being oversaturated with new shares. In a nutshell, it is a period of time during which investors are not permitted to redeem or sell their shares in a specific investment. For the most part, these restriction periods are used for two types of transactions: hedge funds and startup businesses. For startups going public like Lucid through an SPAC IPO, lockup periods help the company leadership remain intact and that the business model remains on stable ground. It has also enabled the Californian business to keep more cash on hand for future expansion rather than having to pay for the outstanding shares that PIF would have liquidated in the transaction. The restrictions are typically between 90 and 180 days in duration. For Lucid, this restriction time was 6 months that began on the day of the company's closing day. Therefore, PIF will hold transactions of shares for a period of 6 months after the merger is complete, after which the majority of trading restrictions will be lifted. But how does the closure date translate into practical meaning? You can see from the Form 8K that it relates to the date on which they decided to join. To put it another way, it simply refers to the date on which Lucid went public and began trading on the NASDAQ, which was July 23, 2021. But whose stakes are involved and how much stake is involved are all questions that need to be answered. One explanation is quite evident, and that is that the PIF has a majority of the positions in LCID, which are represented by AR, which is a PIF affiliate. Following the conclusion of the acquisitions, Lucid's largest shareholder, IR or PIF, owned 62.5% of Lucid Group common stock, which amounted to approximately 1,015,252,523 shares of Class A common stock. This results in the creation of a controlled company within the meaning of NASDAQ regulations, which allow the startup to qualify for exemptions from certain corporate governance standards as a consequence of this. Now that those issues have been addressed, let's clear up any uncertainty about when the lockup period truly expires, which allows PIF to sell their shares if they want to. In this case, we have confirmed the closure date of July 23, 2021, and a restriction time frame of 6 months, or 180 days following completion. Based on that, the official PIF lockup expiry date is January 19, 2022 at 11:59 p.m. Eastern Time. Accordingly, it appears that the first unrestricted trading day for the PIF will be Thursday, January 20th, 2022, the day following the expiration date. When the PIF lockup period expires, the stakeholder will be able to redeem their shares on a predetermined frequency, which is often quarterly. A 30 to 90-day notice is often required so that the fund management may sell underlying assets and make payments to investors who have invested their money in it. But whether PIF sells the stake or not is entirely up to them. However, for the time being, it does not seem that they are in any discussions about selling any because of the ambitious goals that they have for Lucid in the kingdom. Obviously, this begs the issue of why one would eventually wind up into a lockup period in the first place. The answer is simple. One of the primary goals of a PIF lockup was to avoid the market from being oversupplied with the company's stock supply in a short period of time. A single significant shareholder attempting to dump all of their interests within the first week of trade could have caused the stock to collapse to the disadvantage of all other investors. We did see that PIF has a 63% stake in Lucid, making it a controlled entity. On the other hand, the amount of PIF's stake indicates that it is likely to stay in this for the long haul, since it would take many years to wind down its position. Any regulatory authority in the United States does not require a lockup period for any of its investors. The restriction is instead set by the firm going public, or it's placed upon them by the investment bank financing the IPO application. When a firm first goes public, the aim is the same in both cases: to maintain stock values rising as high as they possibly can. Lockup periods for initial public offerings enable freshly issued shares to settle without being subjected to extra selling pressures from executives. This cooling off time enables the market to price the shares in accordance with the laws of supply and demand in the marketplace. It is possible that liquidity may be low at first, but it'll gradually improve as a result of the development of a trading range. We hope that this video has answered any questions you may have had concerning the uncertainty around the lockup expiry dates. I'm curious as to your predictions about what will happen beyond the expiry date. Do you believe PIF will liquidate the stock, or do you believe that they will stay onto the firm and preserve control for the foreseeable future? Let us know what you think by leaving a comment down below. As far as Cool Hand Luke is concerned, Lucid's success or failure will hinge on its ability to produce. There will be enormous obstacles to overcome. Let's wait and see how they do before we get too excited about it. Making a few vehicles is easy, but let's see if they can manage over 20,000 vehicles of production. That should wrap things up for today. Keep in mind that subscribing is still free, and liking the video helps YouTube recognize your preferences. Thanks for taking the time to watch, and I look forward to seeing you in the next one.